So this is probably one of my favorite interviews. Dr. Dark, PhD, retired in his 30s.
How
Well,
you
that is
doing?
my wife, and we have 6. So,
Oh, whoa.
and that's one of, yeah, that's our son. This guy knows what the frack he's talking about. Love people having people on like this guy is a treat because they're really smart, and I can be like, what about this? What about this? What about this? And then off camera, that's the cool thing about this channel is like, I can text these guys, email them like, wait, I don't get this because I'm not that smart, right? We got two of these things, brain cells, and they just keep fighting. But we talk the bank's end game. How does this end? Do you want to know? Well, he's gonna give it to you right away. Then we have the Fed coin. That's where they put it into your account at the Fed. You should probably know about that because that could be happening pretty soon. Bitcoin, gold. Oh, where's Bitcoin going? Where's gold going? You're like, oh, Bitcoin can't stand that. Well, I have some bad things about Bitcoin that I shared, and yeah, he responded. And the Fed goes burr. Does that really exist, or is it a shark with no teeth or an emperor with no clothes? Until that specific day. And is the stock market? Is it going to go up? Is it going to go down? Why does it go up? Inflation, deflation. In the end, my wife actually came in. I wasn't answering my phone. So if that's in there, and she brings the dog too. I call it her husband. You guys know what I'm talking about. If you have your wife has an animal and you're like, oh, you're like fourth. It goes what? The kids, right? You don't figure this out until after the marriage, right? It goes the kids, the pet, and then the kids. Depends on what age they are. And then you. And then at the very end, I said, if you could just give my audience one thing, one bit of advice that they really need to take away from. And I couldn't have planned this more gooderly. He's like, start a business. Like, yes, thank you. Thank you. So I will leave a link in the description on how to start a business. 80 videos for $197. Or you could pay $1,000 if you want. If the code's there, grab it for $197. If it is gone, that means it will be back tomorrow. I cannot allow too many people in the course because they send me things like this and they're like, is this a good idea? Should I do a silicone sleeve? And then I have to respond. Think about each email. It takes me like 5 minutes. And if you get 20 of them, it's not good. But let's roll it with Dr. Chris Dark and enjoy. Hey guys, so I have Dr. Chris Dark on, and I have been wanting to get this guy ever since I talked to Steven. He's like, you got to get this guy. So some of the people that I've wanted on this channel, Dr. Lacey Hunt, have not had him. Jeff Snyder, Dollar Milkshake Theory, Brent Johnson, got him. Steven already got Steven, Lynn Alden, and Scarlett Johansson. So I'm waiting on Scarlett. I don't know if she's ever going to return my call. But Dr. Dark, will you please explain to my audience a little bit about your background so they're like, oh, okay, this is cool.
Sure, happy to, Johnny. So yeah, glad to be on. I'll put in a word with Scarlett, so you know. So yeah, I'm I'm British but live in Hong Kong. I'm a serial entrepreneur. Started 5 businesses, had success, had failure. And my PhD was originally in superconductors, so I'm like a real geek with science and stuff like that as well. And so done things in trade finance, computer games, esports, like blockchain, all sorts of stuff. And now I'm basically retired, and I do macro investing, and I enjoy conversations like this to just trying to help people understand the craziness of what's going on. And I don't have all the answers, but you know, I just like someone like Steve, you know, or Stephen who came on, like I really enjoy trying to just help other people, you know, see that there are other ways of thinking about it. Don't just believe everything you read. So.
Exactly. And everyone has their narratives too. I've been finding that out. The older I get is like, what is in it for him? Oh, okay. So if it's actually deflationary, gold isn't going to do. So I'm starting to learn about people's narratives. So the first question, and guys, there's about five questions, and it's all about the banks. What are the banks going to do? When I brought on Brent Johnson, it was like not going to look too good for the banks, and then gold rises, the dollar rises. We all have our, okay, this is what we think. So my first question is, how do you see the end game, or what's the end game for the banks and for the Fed? And I know this is complicated, but if we just randomly throw something out, what's your thoughts on the end game?
Sure. And before I get to that, I just want to say what you just said is so important. So I always declare what my biases are when I start. So I'm long gold, I'm long Bitcoin, I'm long duration treasuries, and I'm long US dollars. And I have a lot of private stocks. So these are non-liquid, non-public stocks from being an entrepreneur. So that's what I'm invested in. So if people understand that, then you know, if I say something, you can make your own mind up if I'm being biased or not. But I think it's a good thing for everyone to almost like declare. But yeah, your question is, well, that's kind of one of the most interesting questions right now. What really is the end game for the banks? So the very simple answer, I think, is that as we've seen already in China with the, what's now called CBDCs, central bank digital currencies, these are being rolled out. I mean, China has rolled it out. I mean, they've officially talked about it now. It is being used. I live in Hong Kong, just in Guangzhou and Shenzhen, just north of here. People are using this now for real. Australia, ECB, UK, the Fed, they're all working on this. And it all stems, a lot of it stems from Mark Carney. He's one of the guys, when he was governor of the Bank of England, that he made this speech in Jackson Hole a year or two ago, which went down really badly in the US, because he basically was leaving the Bank of England, and he said what every non-US bank central banker wants to say, which is, well, look, we're not too happy with this US hegemony, the fact that US is the reserve asset, and there's nothing we can do about it. And actually, the US's biggest, their most powerful thing is not the army or their nuclear arsenal, whatever, it's the dollar. Just look at how sanctions work. So what you're seeing is the Fed and other central banks, contrary to what they say, have literally no clue what they're doing. They're using QE, so quantitative easing. They're buying these bonds, which is one of it's basically the tool they have. Now rates are at zero and are going to stay there. There is no manual and playbook they're looking at. They're doing the same thing that they've done since the GFC. So for 12 years. It hasn't worked. It hasn't stoked massive inflation. I'm well aware there are some pockets of inflation, like in education, more recently in food. That's probably a temporal thing. And obviously in healthcare for Americans, not necessarily for people in Europe. So, but generally I'm talking with an American bias on this, as it's the most important market. So we're going to see these central bank digital currencies. And why? Because they want to be able to deposit you and me and everyone listening and all corporations money directly into their account. And this isn't a blockchain. So, digital currency people shouldn't be all excited that this is, going to use Bitcoin or something. It's not. It's going to be a centrally owned database. And it means that then the Fed can, so let's say right now in the US, there's lots of debate and arguments on stimulus. And if there's a stimulus package, they have to then issue more treasury bonds, which the treasury does, and then they sell them to the banks, and then the Fed buys off the banks. You can just simplify all that and say, well, I'm just going to deposit Johnny some money, and he can spend it in Walmart now. And that requires the Federal Reserve Act to probably change. But let's be clear, they've just bought corporate debt and junk bonds, which is, you could argue, not legal, but they've done it, and no one's doing anything about it. So ultimately, this means the Fed will destroy the banks, because the Fed regulates the banks. And I think probably Richard Werner has spoken about this the most eloquently. If the person that regulates you is now going to compete with you, good luck, because you're not going to win that battle. And ironically, what the world needs is more banks that are more competitive, that will actually lend to people, not fewer banks. And because of regulation, it's incredibly expensive to be a small bank these days. It's very, very hard. So the end game is, it's probably the last hurrah of what is the end of a 70 or 80 year economic cycle. how that exactly plays out, no one knows.
Okay. You know what? I saw it in the, because I geek out, and I saw it in the last stimulus. It was talking about a digital currency, and then they removed it. And I was what, like, now already? And then they removed it. And I think I read a paper 2015, just all of these things that have been going on with the digital currency. And I think our government too, this is what scares me. Now, my audience is like now clicking away. They're like, oh, they're talking digital currency. But it's so important, because that is where we are going to go, whether you like it or not. When I started stores on Amazon a decade ago, I'm like, I believe people will do this. And that is why I'm doing. I go where the puck, I think it's going to go, not where it's at right now, where you tell me I'm never going to put my credit card online. But so in 2015, I read that paper. And now this is what scares me. You said you're a big investor in Bitcoin. I'll tell you what concerns me about Bitcoin. I don't know who invented it. So I have some concerns about that. There's 10%. Am I accurate on 10% of Bitcoin that whoever who created it holds that percentage, or am I off?
It's probably that. There's no actual way of knowing, but it's highly likely to be about 2 million Bitcoin. Yeah.
Okay. All right. So whoever created this holds roughly 10%. And then I'm like 50-50. Is it government? Is it not? Everything else I really like about Bitcoin, but that, and then we have what's another thing? A Tether, where I feel like they're just like they're just print, because they can just print and buy. And then, so if I invest in it and Tether crash, when that gets uncovered, well, there goes my assets for a time. But I would rather buy Bitcoin at that time when it gets shaken out than now. So those are, and then the third thing is just the layers of money, which I don't know if people understand. Like gold is the first layer. We have layers, and with Bitcoin, that's the first layer, and it costs money for me to send Bitcoin to you and I in the back end, and then we need to build a second layer. So I think it's kind of expensive, and I think the people may throw up their hands and go, "I'll just go with the Fed coin instead." Your thoughts, and help me out with this.
Okay, so I'll be incredibly surprised if Bitcoin was started by a government, because honestly, this came out of the most geeky crypto, as in, and I don't mean cryptocurrency because it didn't exist. I mean cryptography forums, where you were only allowed, and I'm being very stereotypical here, if you had a big beard, and you're in a very dark room, just like I am now, and that is, I mean, wow, if a government started it from that, they're genius. I don't think governments are capable of that. So I'm not worried about that. The 2 million coins is interesting. I mean, you can get that from some early analysis of mining. I mean, I'm in the camp that not knowing who Satoshi Nakamoto is or are or were, because it's possible, one plausible person it is Hal Finney, who is not alive anymore. I think that's a real strength for it. It means it is genuinely decentralized. One could argue Ethereum is less decentralized in many ways, but one big way is because Vitalik still has a very big influence on it. So again, a lot of these arguments you can argue them both ways. Like, well, Bitcoin's used by drug cartels. Oh, okay. Well, we just had the FinCEN papers showing that it's nothing compared to what the banks do. So, a lot of the time things can be argued either way. The Tether thing is interesting because the legal documents from about a year or so ago show that it wasn't 100% backed. It was roughly 80% backed. And again, the exact number may be 78 or whatever. But just remember, your money in a bank account is about 10% backed by assets. So, I mean, again, like, you give HSBC or Citibank money, well, your money is not there. I mean, they do whatever they want with it. They may loan it out. They may invest it in something. They just owe you it. It doesn't exist. And I think a lot of people, that's an important thing to get head around. So Tether is important in the ecosystem, but I think it's also got less important with time. Although it's still, in terms of trading pairs, if you're the number one kind of stable coin, you're always going to have the lion's share of the trading because it's a network effect. So I'm not too concerned on that. I was more concerned a few years ago when we really had no clue how much it was backed by. Now the layers thing is interesting because, I mean, there've been times when to send Bitcoin to someone costs $50 to make a transaction. I mean, it's nothing like that now, but that was in December 17. So having like second layer solutions that sit on top that either aggregate lots of transactions, make it cheaper. I mean, this is all this is being built and has been built. Interestingly, with central bank digital currencies, that could give you a very easy way to convert your dollars into Bitcoin. I just don't see Bitcoin as a currency that's going to be used to buy a cup of coffee at Starbucks. And again, one can argue, if you look back over the last 10 years, there have been times where that was the narrative, but it's clearly shifted then to be more of a store of value. Now it's shifting again to be programmable money, very clean collateral because you can't pledge it twice. Could potentially replace treasuries in that regard. So, it doesn't have to be used by everyone every day. And also, why would you spend something if you think it's going to go up versus US dollars? So look, it's a fascinating topic. And I'd urge listeners not to tune out when they start hearing about digital stuff, because everything's been digitized. Like, are these the same listeners who said, well, I want to put my, or vinyl's having a comeback, but CDs are now non-existent. So, well, I'm playing my CD and their kids looking at them like they're like, a little out of date. Most things that have been digitized, computer gaming doubled in size from 60 billion to 120 billion market size because of digitalization. Like, not buying just a box at, EB Games or whatever. So most things have been digitized. The stuff that hasn't really is a lot of stuff in education, a lot of healthcare, but it's getting there. And obviously some stuff in the financial system. Although, of course, 99% of money is already digital. I mean, if you look at the amount of coins and notes out there, it's a very, very, very small number.
Yeah, I could see that's what I see is that Bitcoin is gold. And then I just got 100 dislikes for even saying that. But it's a store of value. And then, and I think the people, I mean, we have Walmart over here. Go look in Walmart, look around. That's our population. And I believe that those people are not going to change. They're going to go, oh, wait, so I can have a digital wallet on my phone and the Fed can put the money right in there? Yeah. Done. How much? 1,200? All right, done. And if I take this, here's another thing. Here's what's going to happen with bank runs is they're going to say, you know what, if you deposit this said currency into your account, well, this is actually, we'll give you more of a Fed coin. And so everyone will be running to the banks with their change, with their dollars. They're like, yes, this is amazing. Now, with all of this, there's two things that I want to ask you. We have inflation and we have deflation. I think we're pretty much on the same mindset of just about everything, which is nice to have a guest on where I'm just not like biting my arm off.
Always good to get confirmation bias, right? Which is literally the worst thing if you're an investor. You want to try and avoid confirmation bias.
Right. Oh man. Yeah, I know. It just feels good to be wrong. And we can all come together as wrong. You have inflation and you have deflation. I believe, I had Peter Schiff on, he disagrees with me. We are in deflation. I believe we will continue to be in deflation based on the Fed going brr. It like what people think and what really happens is so opposite. So would you agree with me that we are deflation, and then when the Fed allows the people to have a Fed account and put a Fed coin, inflation? What's your take on the deflation inflation game?
Yeah, so the way I think of this, and one of the people you mentioned originally was Dr. Lacey Hunt. So I've had the privilege to speak with him on the phone, and he was very generous with his time. And I think you've in effect summed up his view on this, which is there's that moment when the Fed starts to spend, not just lend. And I think he puts it very nicely. Now, that may or may not require a change in the Federal Reserve Act, but I don't think politicians care. So that is definitely that's a fork in the road where politicians will then, they will not be able to help themselves in how, and what's a politician going to do? Tax you more and be unpopular, or press a button to put more money in your Fed account? I mean, literally 100 out of 100 politicians in the world are going to do the latter. I don't care what country you're in. And even, when was the last time you heard the Tea Party mentioned in America? Like, it's all you heard about a few years ago, trying to be much more hardline with this stuff. But that debate's kind of been gone. So so that's how one can get to a very inflationary thing. And also remember, Peter Schiff, I think Peter's a fantastically smart guy, but he sells gold. That's his core business. Of course he's going to say things that are good for gold. That's, again, my first point. Know people's biases. I think Peter's phenomenally smart, and I love his podcasts, and I turn off when he starts to bash Bitcoin because he doesn't understand it. And that's fine. So in terms of, so there's lots of other factors that have to be taken into account. So if we start with just, there are structural deflationary trends in the world. So the most obvious is just technology and demographics. So COVID has hopefully allowed people to understand what a non-linear system is. So linear goes 2, 4, 6, 8, 10. Humans are very good at understanding that. Non-linear systems go 2, 4, 8, 16, 32. Well, you know what? If you put one grain of corn on the first square of a chessboard and you doubled it, before you get to the 64th square, you'll literally, there's not enough corn in the universe to do it. It's like impossible. And humans can't, it's just very hard unless they're mathematically inclined. So COVID, and remember, like Angela Merkel the other day was explaining exponential growth. It was fantastic because she's in charge of Germany. She has a PhD in quantum chemistry, by the way. So it's kind of cool, right? But again, 99% of politicians they had to get their head around it. And so nonlinear growth, i.e. geometric or exponential, when things go zoop, we've just seen it with COVID. So now I hope people understand that's what technology does. The fact that we're just talking like this for free on Zoom, we could have other people in this, and we don't need to travel. We don't need to stay in a hotel. We can eat at home, not in a restaurant. Like, technology is very nonlinear. And also demographics is more linear in that when there are more older people in the world, older people, when they retire, on average spend less money. Very few people increase their spending when they retire for very obvious reasons. They have less money, and pension systems aren't exactly in good shape. So that's a huge thing. And in the US right now, you've got peak baby boomer retirement for about the next 2-3 years in the last couple of years. So the average baby boomer is now 65. So those are huge forces. And from a Fed standpoint, people say, yeah, but if you just go burr, obviously it's inflationary. Well,
it's not.
Again, like it's not, but there are small pockets that are. Yes. So again, a lot of things are a little more subtle, but I mean, I've spent a lot of time on this, and I mean, Steve Van Meter and I have talked about this for hundreds of hours, and I would say where I came out, and I spoke to a lot of people in banks, central banks, and was that the vast majority of QE is not inflationary. It's going to end up as bank reserves, and we can talk about those later. They're an interesting topic, and I've got like a novel way of thinking about them that might help people. But there is some QE that does leach out into what's called the money supply, i.e., if you want to be geeky, often people look at something called like M2 money supply. So for example, if you sell a bond that you own to a bank, and the bank is really an intermediary passing it through to the Fed, the bank will credit you with a deposit. They have created that money, and that does enter the money supply. But most of the bonds being sold to the Fed are from the bank's balance sheet, and then there is actually no change to money supply. So I think it's not true to say that it's impossible for QE to lead to any increase in the money supply. And actually, when I spoke to Dr. Hunt, he agreed on this. So this is one of the reasons stocks have gone up. There's many reasons.
Yeah, if you can explain, because that was my next point.
Okay.
I would say back in the day, before I didn't know what I know now, well, yeah, the Fed all of this money needs to go somewhere. Where's it going to go? It's going to go into the stock market. What is the reason why we have such a bubbled stock market?
Well, first of all, never forget the power of a meme, right? So, I think we're pretty similar ages, and the Fed goes burr is such a meme on Twitter, on FinTwit, and that, right? But it really is not a meme in the general population. You go and speak to someone in, I don't know, Detroit on the street or walking down and talk about Fed goes burr, and they're going to look at you like you're insane. So you got to remember that we live in this bubble, which is YouTube and Twitter and this type of stuff and podcasts where, you know, we've all seen the GIFs of, you know, endless money being printed. I love that GIF. I think it's hilarious. I find it by just typing burr in. And if you put enough R's in, it comes up. It's hilarious. But sometimes we've got to realize we are in our own bubble, and 99% of the world, frankly, doesn't care. So why has stocks gone up? Well, the most important point first is they went down a lot. People are forgetting that. They did go down 30%. Now, I'm well aware they went down more like 55% if you look at the S&P in 2008. And the NASDAQ went down 85% in 2000, 2001. But they did go down. And what then happened was a huge but fast influx of liquidity from the Fed. If you look back to 08, it took them like a year to sort out the programs that took them 2 weeks to sort out this time. And that's including swap lines, i.e. ways for the rest of, at the time, people were very short dollars. When people panic, they all go into the US dollar and it gets very strong. The whole world was short dollars. And the Fed was incredibly fast to give pretty much any country that is basically not China. That's kind of a much more political hot potato on this one. Any country that's kind of decent size, even New Zealand got swap lines. And so you had this vast amount of US dollars flooding the system. And of course, some of that went into risky assets. You had what I talked about with QE, that does increase some of the money supply, i.e. people have more money in their account. Well, they're going to do something with the money. Well, you know what? Some people put it in stocks. You had other really interesting things, which I don't think people worked out at the time, but people that say they did, unless there's proof that they worked this out in March, April, I would take with a pinch of salt. But you had the stimulus checks, which a lot of people didn't need. Well, I got $1,200. Well, what I'm going to do is, I'll throw it in the stock market. But no, not just the stock market. I'm going to throw it in short-term call options, which I can do now on Robinhood, which years ago, a normal retail investor couldn't do that. They weren't allowed to make that trade. This is pure betting, by the way. Like a 2-week call option on Apple stock or Tesla is, okay, it might make you 10 to 1, or you could lose your money. But people should be under no illusions. It is absolutely betting. And so, but what only got worked out recently was that this was happening because everyone dismissed that at first, saying, oh, well, institutional money is so much bigger than retail. So this is just irrelevant. Who cares? Like, whatever. But what people forgot was when you buy one option, you're getting, it's actually 100 shares. There's 100 to 1 leverage involved in it. It's not leverage in that you can't lose more than you put in, but and this means what happened was the market makers like Citadel in Chicago, traditionally the banks were market makers. Now it's kind of other firms. They had to hedge themselves. They would sell you the option. They had to hedge themselves by buying lots of Apple stock, in our example. So they pushed the stock up. So basically you had the tail wagging the dog. Normally buying basically spot market. So buying shares should be what sets the price. And the options market is kind of the sideshow, but it flipped on its head. The other thing you've had is this huge trend towards passive investing. So, you know, Jack Bogle started this with Vanguard in the 70s. Back then, you know, people used to have money in active funds that would decide, do I buy Apple or Tesla today? Do I sell them today? Well, now you've got, no one knows the exact number, but roughly 50% of all flows are just passive. They're in ETFs that they don't care. They're just going to buy or sell depending on what other people have done to the price. Well, you're getting fewer and fewer people setting the price. And so retail, with the leverage of options, are now setting the price. So yes, you could say it's a bubble, or you could say, is it? I mean, if I'm Apple and I can borrow for 1% for 30 years, right? And I can make a lot more than 1% on that capital. You know, what is the right multiple for this world? It's a nuanced conversation. I would argue it doesn't matter. It will matter one day. You know, everything's a cycle, right? You know, we're not going to just have ever increasing PE multiples forevermore. But
Would you say the fourth turning is BS or it's legit? Did you read the book?
Yeah, I've read the book, and
Cycles?
I've spoken about it quite a few times. I One of the people I'd love to speak to is Neil Howe on it. So the fourth turning for have you covered it? Are your listeners
A little bit,
okay.
a little bit. I try
Well,
because it's so lengthy.
yeah,
I tell them that we all go in. It's all cycles. These are 100-year cycles. These are all cycles. And what you're experiencing right now, I could have predicted this, and people did. It's so yeah. Go if you want to give a quick little shakedown.
It was I was on George Gammon's show recently, and this was the first question. It was, "Do you believe in cycles?" And I said, "Well, yeah. There's two really important cycles. There's the long-term debt cycle, which is what happens is, I think you've had Lynn Alden on.
Lynn,
so
yeah.
She explains it very well, which is that you have all these short-term debt cycles, which are basically the business cycle. So it used to be 4 to 8 years. Now it's gone 10, 12. It's gone more years because of the central bank money. But what happens is you have ever increasing amounts of peak debt. So whether you look at debt to DGP or whatever ratio you want to look at, and then eventually it just blows up, which is of course what happened in the 30s. And people thought it was probably going to happen 10 years ago, but it didn't. But we're now at all-time highs, of course, in terms of debt to GDP. And don't get me wrong, like Japan has 400% debt to GDP. Like it's had that for 30 years, pretty much. Like this can go on for a long time, although it's got different dynamics to the US. So you have this long-term debt cycle. And then you also have exactly the cycle you mentioned, which is on the fourth turning, which is a people cycle. So it's kind of a human cycle. It's basically 4 generations, each turning, right? A generation is roughly 20 years, right? 25 years. Well, what do you get if you multiply 20 by 4? Well, what a surprise. You get 80 years, which is the same as the long-term debt cycle. And what's happened is in the 30s, and then of course you had the war, the Second World War, which was, let's hope that does not happen, but that's traditionally been what has reset everything, is a huge war, which is stupidly expensive and also changes attitudes after. So the first turning in the US would be the 50s, 60s. And don't get me wrong, there was Cold War happening and stuff, but you had mind-bending changes going on, right? And then what happens is as each generation comes, people disagree more and more. It gets more partisan. And by the fourth generation, everyone hates each other if they vote for the other party, which is, well, exactly now. It's exactly what happened in 1938. And Ray Dalio has spoken about this a lot. He's actually been, I think he's been very eloquent on this.
And the video I just did, now that they've seen it, is just about with algorithms. What the algorithms are doing is they're polarizing people and getting them, oh yeah, the left and the right. There's no such, you're only right. And that's the only thing you ever see is the right. And the people on the left is the only thing. So if this doesn't happen, I'm just going to be shocked.
Right. But again, this is all about confirmation bias, right? So it's really, really valuable to go on. I mean, I don't really use Facebook much, but let's just use Facebook as an example, because 4 years ago in the election, they were right at the center of it all, right? Interestingly, we haven't heard about it so much this time, which is actually interesting. But I saw, so in the UK, I tended to vote for like the more right-leaning parties, which by the way is very different to the US. It's very different politics. Because the UK and Europe doesn't have a lot of the kind of Supreme Court debates that you have in the US. So you cannot say that's GOP. It's actually very much in the middle of GOP and Dems. I went to one of my friends who voted, this was years ago, who voted for Labour, which is like the left-leaning party. And he showed me his newsfeed. I couldn't believe it. I was like, are you kidding? Is this like fake Facebook? This cannot be. Because to your point, it was 99.9% just amplifying every bias you have. Now, the fact that no one's talking about this right now might mean they've made some progress, because 4 years ago, this was a big, big deal in the election. But we're going to see, right? This election is going to be a total nightmare in terms of no one agreeing what happened. It's going to take probably a month to count. I mean, it's going to be an absolute crapshoot.
My prayers is that there's just decisive. I don't care. Yes. I just want it to be very much strong on one side or the other, so we don't get I mean, it's going to be bad anyways. I just, I need to get a little metal boat and just start paddling and get out of here. Okay. And then the last question, what if you could share with my audience? Oh, wait, just for me. Are you strong bond?
Yeah. So as in, well, what type bond? US
Bonds,
Treasury.
our bonds.
Yeah, your bonds. Yeah. Yeah. So
Our
like I
debt.
said at the beginning, so in terms of, well, okay, so at the short end of the curve, no, because they're at zero. So I don't believe you're going to have a negative situation. It might happen, by the way.
Well, TLT.
But
That's
something like TLT, yeah. So that's at the long end, right? You're talking
yeah.
30-year end. Yeah, so I'm long those. But I see it as also a hedge, right? So you've got, I don't need to be right on deflation, inflation. And I agree with you that it's probably deflation at first that then may lead to inflation in the future. Now, the little subtle point is that markets also know that. And markets front run. So if you're all in deflationary assets right now, you could miss the whole fact. The markets could start front running tomorrow that it's going to be a Dem sweep, which it may or may not be. But if it is, oh, you wait for a $10 trillion stimulus. They will literally just make up any number. And by the way, they may build bridges and upgrade airports and do stuff that makes sense. We don't know. But like the market is very complex. So I have a bit of a theory of I want to be investing in what I believe now, but also what the next kind of narrative is, because I don't know when the market will front run. I don't believe the market front runs two narratives. It's also very, very hard to predict that. So yeah, long bonds, but at the same time, long gold and silver. Bitcoin is more tricky. You could say that's different things, but which, to your point, if you have deflation, that should be bad for gold and really bad for silver. But again, if it also turns into a complete crapshoot, gold might be what you need. So I don't think it's worth being a hero in investing. You've got to live to fight another day. And yeah.
I actually offer my audience, and I don't know if you've seen it, but I am not I mean, I have securities that I've held for 20 some odd years in the S&P 500 and retirements and all of that kind of stuff. I hold gold, I hold silver, I hold Bitcoin. I pick up Bitcoin on the dips, but I'm a swing trader. And because it just makes sense in my head and I trade on the 9, and I don't want, if it goes, I don't want to be that guy holding the bags. I don't care if I take a loss because I want to be risk adverse. So when it dips down and then it comes up, the volume's there, I put it in a buy, it starts to peter out, I sell. And then I try to pick just winners on the 200-day moving average. And that's just what I do. I'm constantly in, constantly out. And then for also my audience, in the description is the code for $200. Normally it's 1,200. Sorry, I didn't mean to do the plug, Chris, on you on this one, but would you agree? Does that seem like a good way to, you're in? Now with you guys pay the fees and stuff. For us, it's, you don't got that. You don't got that. Great English over here.
Yeah, I mean, let's be very clear. Everyone's style of trading should depend on entirely who you are.
Yeah.
If you're 21 with no family and you've just started your first job, let's say you're an engineer and you're coding at Facebook or whatever, right? That's incredibly different to if you're 58 with 3 kids at university and all, a mortgage to still pay. And, there's no one size fits all. So I can talk about what I do, which is more akin to yours, which is I'm going to have, based upon what's happening right now with the inflation deflation debate and also the GDP growth. So, Bridgewater's written a lot about this. Hedgeye's written a lot about this. Being data driven and knowing, okay, so right now, we're in basically, if you're looking versus last year, GDP obviously down. That's fairly obvious. The fact that people are talking about, is this a recession or a depression, makes that kind of pretty clear. And of course, there's a debate on inflation, deflation. Okay. So if I think that's 50-50, I'm going to roughly allocate 50-50 to deflationary, inflationary assets. Now, if I get a really, really strong view on something, which I did on, say, short-term rates at the beginning of the year in US, because I was in Hong Kong, I saw this thing really early. And then I would go into the options market to buy something that in effect gives me more leverage. But that's only ever a small percentage of net worth. So again, if you're 21, you might want to swing for the stars and not care. If you're 58, that's probably not the thing to do.
Yeah, and I'm careful on I am not an all-in kind of a guy. Like 20%, where people are like, "Oh, are you swing trading?" I'm like, "No, So it's just I don't sleep well at night. I've done a lot of deals in real estate where I'm just like, "Am I going to get my money back?" And I'm loaning like 100,000 to someone, but they're going to pay me back, and the 100 plus another 100 in 30 days, and I'm the second. And people are like, "You're an idiot," but I'm like, "Look, now I have $250,000, and he wants it to." I want to be able to sleep at night. So, and I don't need stuff. So that's kind of that's my trading.
Right. I just released it today, a podcast with Raoul Pal on this, which is exactly this topic, which is when to swing big and when to concentrate a bet. But the whole point of the podcast was not what bets to make. No. It's what has to go on in your mind, because people don't realize how mental this game is. Psychologists should be fantastic investors in many ways. And a lot of the big hedge funds have in-house psychologists. It's incredibly hard mentally. If you bought Bitcoin at $20, do you really think you held it to 20,000 and then sold exactly at the peak and then bought back in at 3,000? Of course not. Making 1,000x on something like that, or even 100x, even 10x, it's incredibly hard mentally. So like that's also something like, I just think if you have, it sounds like you have a process you follow. If you don't have a process, if you're just randomly throwing spaghetti at the wall, you may get lucky, but in the long run, you probably won't. Have a process. It can be different. It can be data driven. It can be thematically driven. It can be whatever you want. But
yeah, people ask me about Bitcoin, how to, in my course, and I go, I don't trade Bitcoin how I would swing trade, because you get these wicks that'll just knock you out.
Yeah.
It is. It's and they're like, "Wait, what?" Because
it used to be a lot worse, though. It used to be a lot worse.
Gosh, talking about like on a roller coaster with no straps, you're just holding on, and it feels, trading Bitcoin feels horrible.
Right, but who makes money from trading Bitcoin are the exchanges.
Oh, yeah, exchanges.
So I mean, there are there are very few people in the world that have made life-changing generational wealth from trading like very short-term things, like trying to day trade Bitcoin or any.
No way.
There are some. It's now, of course, you've got people like Renaissance Technology and stuff who are using algorithms to do it. That's different. But a human doing it is super hard to make that money. So, okay, you go onto crypto Twitter, and of course, everyone's a genius at trading Bitcoin. This is, of course, a complete lie. The vast majority of people are losing money. The people that are making money are the BitMEXers, maybe less so after the lawsuit that just happened, the Binances, the Coinbases. So I'm with you. For Bitcoin, buy and hold. Just forget about it. The funny thing about Bitcoin is that if you look at the over the long run, it's a very small number of market days which have generated all the returns. And it's a very different structure to it than, say, Apple stock. Right. And so if you haven't been in the market the days it had those massive gains, then, and also it can have massive losses, then actually you get terrible returns to Bitcoin.
Yes.
So it's a tricky one. Some people, do trade it. But, for me, it's like, as I say to people, if you don't like it or care about it, I still think you should probably have 2, 3, 4%. Because it's a free call option on a future system. If you really like it, 20, 25%. I know people who are worth tens of millions of dollars who have 60% or more in Bitcoin. So like, it all depends on, by the way, there are also people that would have that in gold and stocks and whatever.
Right. And then just to if there's anything just to wrap this up that you wanted to tell my audience, I know you're already set. You got it. I don't even have to ask it, but if there was something like, this is what people need to understand about anything in life, I have at it. This is your time to say, this is what you need to know.
Yes, it's related to what we were just talking about in terms of, so let's just say you're a 20-something and you can take risks. It might be starting a business, which is a great way to do it. It could be taking, some more aggressive risks in investing. So the most important thing is if you're doing something that all your friends and family think is really logical, I can almost guarantee you're wrong. right? So you've got to, if they're calling you crazy and nuts and you're like insane and what are you doing, like, then you're probably onto something. You could still be wrong, but what you're certainly onto is there'll be an asymmetry to the bet, i.e. you don't ever do something which you could lose 100x what you put in. That is absolutely foolhardy. So Bitcoin's a nice example. If you buy Bitcoin, the maximum you can use is what you invest. If it goes to zero, which it doesn't, we can argue whether it could or not, it doesn't matter. The point is, you're not levering it up or doing stuff like that. But the upside, you could argue, say 100x or more. It's possible. So that is the asymmetry. So you're never going to make that asymmetry in an investment if everyone agrees on it, because it will be priced. The market isn't totally efficient, but it's relatively efficient. So the key thing is, like, I love it when people say something I come up with is totally nuts and insane, because if I think I've worked out something that they haven't, I'm willing to roll the dice. And that's, someone say, well, you're just betting. Well, not really. If I'm pretty sure I've worked out something, let's say I'm 50-50, but it gives me a 10-to-1 payout. Well, it's a no-brainer to do that. Not with all your capital, but again, you can use there's various ways of mathematically modeling it, but like using a small amount of capital, then that's going to be a winning trade if you keep making it. So yeah, so if people say you're crazy and mad, then that's like a good thing. You should embrace that.
That will be your shirt. That's it. That'll be the ending. Well, hey, Dr. Dark, thank you so much for coming on. I really appreciate it. Now that I got you, now I just have Lacey Hunt and Scarlett Johansson, and then I could just drop the mic and get out of here. But again, thank you very much. And I look forward to possibly seeing you again.
Absolutely. It's been a pleasure, Johnny. So thanks very much.
Thank you.